to the Inspire Wealth podcast with Prof, where we dive into the world of real estate investing and wealth building strategies. I'm your host, Mallory Meehan. I'm a real estate professor, attorney, and seasoned investor here to guide you through the ins and outs of creating wealth through real estate. If you're looking to take your real estate knowledge to the next level, don't forget to subscribe to stay up to date with our latest episodes and offerings. Welcome to another episode of Inspire Wealth. I am your host, Prof M, aka Mallory Meehan, and today I'm joined by Jason. Jason, how are you today?
Good. How are you? Thanks for having me.
Great. Welcome to the show. So
Thank
Jason,
you.
the first thing I noticed from when you hopped on here were your layouts behind you. So I'm
Yeah.
really interested to hear a little bit about how your career in real estate began and kind of where things are today.
Yeah, for sure. So I'm in Raleigh, North Carolina. I moved here from the Maryland area in 2002 and immediately got into general brokerage. Built a real estate team with a business partner that was really successful. Made it through the Great Recession of '08 and all of those fun times. And when we got out of that, I kind of, had realized, wow, there's a lack of education with real estate investing that isn't kind of woo-hoo, let me sell you expensive seminars and programs and all of that stuff. And since I had always invested in real estate and really had a passion of it and really enjoyed the interaction, I was offered a position at our local community college here, which is the largest in North Carolina, Wake Tech Community College, and started teaching just in the evenings, just real estate investing to people of all ages and demographics and income levels and all. And that was 12 years ago, and it's very popular now. And that spawned me to open up my own investment education company. It's called Investors Wealth Education, and we kind of do really two things through that company. One is we do online and in-person courses. They're super affordable. It's really kind of a cover the cost type of thing. And we have different topics, right? We'll do a 4-hour course on how to get started in Airbnbs and short-term rentals. We do, a course on how to just set investing goals, right? A lot of people are out there just, they're kind of a quantity person. I'm a quality person. And so how do we make wealth with 3 properties instead of feeling like I have to leverage to buy 30, which the average person just probably isn't going to do. And then we also do one-on-one consulting, which is probably my most kind of favorite thing to do, because I'm sitting down with, somebody or a couple who wants to get started in investing. I've met with people that are in their young 20s that want to do it, and I have people that are about to retire that want to start doing it. And so that kind of the problem solving and the tax implications and all of these things kind of keep me really on my toes, which I love doing. And then we work with seasoned investors who maybe already own 5 or 7 properties, and they kind of want to go to that next level, and they're not stuck, but they're unsure. And so I do a lot of one-on-one consulting, which is great. And then recently I was offered a position at NC State University as an adjunct professor where I taught real estate investing and finance, and we'll be teaching a grad level in the spring through our new North Carolina State APIS program, which is a Master's of Science that's kind of being created for real estate development. So yeah, all education, investing in real estate, those 3 things, that's all I do all day long.
That's why I love that, I found you, you're on the show because we definitely align in our teaching methodologies
Yeah.
and understanding that education in real estate is really not accessible for most people unless you're
Right.
going to a university, and not all universities offer it. And I think that's a shame because real estate's a consumable good that everybody is going to be consuming at some point in time in their life. And we don't do enough to educate people on what that means and how they can utilize that to build a better life financially.
For sure. Yeah, it is, it's usually your biggest asset. And it is one of the greatest ways to reliably build wealth over time with not zero risk, but with less risk than a lot of other investment opportunities.
Yeah. So I'm curious, do you have investments yourself?
I do, yeah. So I kind of focus on three different investment segments. So one is we have long-term rentals, and we have short-term. We are quality over quantity, so we don't have a ton of them, which is great because if you own a lot of them, you understand the time and capex and all these fun things that go along with each one. I kind of reference it as each house isn't a house; it's a used car. I got to replace the brakes and the tires, and and it's getting mileage on it and all of that. So I don't want to own 100 used cars in my driveway. We do some fix and flips. That's more of kind of a hobby. I really enjoy doing it. I have my GC license, but I'm particular about the projects because it is a hobby. I enjoy doing it, so I don't do a ton of them unless the opportunity is right. And then we have recently started to do some finance investing where we will, invest in, helping builders purchase lots or do some new construction finance, or help lend to fix and flip investors that we know, where we will help kind of back end that financing for either a profit share or just a straight debt, type of thing. And that's been nice just from a time perspective. It's not as lucrative as owning the actual asset, but from a time perspective, I'm all about owning my time as much as possible. So
100%. I love that. Do
yeah.
you have a particular market that you're investing in, or do you kind of have them spaced out?
Yeah, no, we pretty much focus here on Raleigh, within, 20, 30 miles. I am, some people would call me a little bit more conservative of an investor. I think, I joke if you went through 2008 and you were in real estate and you're still in real estate today, you have a little bit of PTSD from what we went through during that time, whether it was as an investor or as a broker. And I was both at the same time. And so I'm one of those guys that's always kind of looking over my shoulder, like for the next one. And so I am a big proponent, just for me, about being an expert and the smartest guy in the room, if I can be, about what I'm investing in. And so while there's a lot of great markets out there, I do focus primarily here.
Well, I will say that Raleigh, in my view, is a really good market to be investing in right now. I think there's a lot of growth potential. I think, Charlotte has built itself up, and I
Hmm.
imagine that Raleigh is kind of going to be the next big move city. And obviously, my brother is living there with his
Yeah.
family, and so I love that area. So I definitely don't disagree with you at all. I think that, you know, you got to find a market that you understand and that and for a lot of investors, I think that's the best way to start is to start in your local market, because that's most likely going to be the market you understand and you can kind of see the trends that are occurring.
Yeah. And because I do a lot of consulting, I have to know a lot about the market anyway,
Mhm.
right? You can't give people advice just by Googling. And so, or I don't think you should. There's a lot of people that do, but I don't think you should. And so I kind of have to be an expert in my market anyway. And so it's kind of like, why learn a new market type of situation?
Oh, definitely. Totally.
Yeah.
Okay, so I'm curious, when you have your students come in, and let's say, they take a couple of your classes and now they're like, okay, I'm ready to pull a trigger. What kind of process do you walk them through in order to help them kind of understand what asset or what type of investment is going to be best for them specifically?
Yeah, I'm a huge kind of goal setter for my clients and students. And so I say, work backwards. What do you want and when do you want it and why do you want that, and my college students, it's hard because look, they're 20. And so to ask them what do you want when you're 60 is, I hear all different types of answers. Now, I will say a lot of my college students, the idea of retiring at 60 is absurd. They're all talking about retiring by 30. Like they're in a different world,
Percent. They're going to
the
work.
money they can make online. Yeah, exactly. So I have to change my mindset because I'm in that generation of, well, you work till you're 65 and then, and they're like, that's the craziest thing I've ever heard. And I'm like, it is crazy, isn't it? So I like to set up their goals and for them to figure out just how much money they think they're going to need. They're going to be wrong because we're all wrong because we don't know. But just get that goal and then work backwards and say, okay, how many houses do you actually think you need. And usually what ends up happening is when we work backwards, they realize they don't need as much as they maybe thought they needed to hit their goals. And so now it becomes realistic, right? If I talk to a college student and say, hey, look, you're 20. If by 35, you can buy 5 houses, one every 3 years, and use leverage to do it along the way, look how this will dramatically change your life. And now all of a sudden they are taking action because it's realistic. Whereas if I say, hey, look, yeah, to hit that goal, you got to buy 100 houses and you probably got to do it in the next 10 years. It's just so discouraging because it's like, where do you even start? Right. And so I'm a big fan of having them set their goals and then working back, determining how many houses we need with an average appreciation and principal pay down, real simple. And then what I've seen is that becomes palatable and realistic, and then they can actually take action. And then usually once they get to 3 houses, we're starting to talk about leverage strategies, and then we start talking about, the IRS is chomping at the door if you sell something. So then we get into 1031s, and so we kind of take it step by step instead of throwing all of this at once and saying, just too much. And then, when I have older clients who are maybe closer to retirement, we're having a totally different conversation about risk. Mm-hmm. Right? They went through 2008 with the stock market, ignoring real estate, just their retirement accounts. And so now we get a lot of people who are at that stage where they're like, hey, I'm becoming really more conservative in my retirement. And I say, gosh, we should be looking at a self-directed IRA. Mm-hmm. Sit that in there for 5 years, roll some of this real estate in. And so I'm not talking about self-directed IRA with 20-year-olds, but I am with 55-year-olds. And so that's where my expertise comes in about identifying who is who and what strategy is going to kind of give them the best lift off point.
I love that. Do you have a particular demographic? I know that you said that they kind of range as far as age because you have your college students and then maybe who are planning on retiring in the traditional retirement age frame. But do you generally see people who are maybe high earning individuals that are just looking for ways to maybe mitigate some of their taxes, or is it kind of just people across the board?
I really have. It's kind of broken into 2 different segments. I've got higher end clientele who are trying to avert IRS taxes as much as possible. So they're trying to become real estate professionals so they can write off losses and play that game, which I totally understand. And the interesting thing about some of my higher income earners is that, and this happens with a lot of people, is higher income, higher expenses. It's like, gosh, you have a $1,500 car payment. Okay, could you drive a similar car for 800, right? It's kind of having, for those people, surprisingly, they're actually a lot of times really poor with money.
Oh, yeah.
Because they've never had, no, I won't say never, but since they've become high income earners, they haven't had to learn about money. It's just always been there when they needed it. And so now they're getting to the point where they haven't invested it as well, or these type of things. And they're like, what do I do when I stop making a couple hundred a year? Right. And so that segment over there is actually reteaching them how to think of money as a tool and less as a compensation for their time. Right. The doctor that makes a $500,000 a year or $1 million a year comes in and I'm like, yeah, you make great money, but you're trading your time.
Yeah.
And as soon as you stop giving that time, that faucet turns off. And then my younger, people that have really no money yet, they are like, how do I even start? Mm-hmm. I don't have credit. I'm making entry level, money. And for those folks, that's where linking them up with private investors or talking to them about co-signers with parents or, a gift from grandma or having your parents become an investor by using a line of credit on their primary house that has hundreds and hundreds of thousands of dollars of equity. And their parents are like, he didn't even know that existed, and so.
That was an option.
That's right. Yeah. So there's different, we kind of go, but it's usually those two. I don't have a ton of people that are making, let's say 100 who own 2 houses and they're stuck. I either got high net worth and just never learned how to use money, or I've got low net worth with a lot of ideas and not sure which one to implement.
I love that. Yeah, I mean,
Yeah.
and those are typically the type of people who I'm also dealing with as well.
Hmm.
It's like you either have money, you don't know what to do with it, or you're looking for ways to help mitigate some of those tax liabilities,
Hmm.
or you don't have the money, but you have the desire, you have the, the drive. And so I find that people who have a lot of money lack the time, and those that
Hmm.
lack the money have the time. And then it's
Hmm.
figuring out how to put those together and how to make it make sense for them in that particular case. So
Yeah.
tell me what you kind of recommend for those people.
For those people, there's a couple things. One is I tell people to stay in their lane. I get some of these higher income earners who are like, I want to go buy an apartment complex, or a 16 plex or something. I'm like, well, outside of your primary residence, have you ever managed a tenant? What's your experience level? And so some of it is just bringing them way back to the basics and just saying, look at your primary residences over the years, how well they've done for you. Let's not reinvent the wheel. Let's not outsmart ourselves just to brag to our friends that we own a 16 plex, right? Set the ego to the side and let's just purely look at the numbers from a common sense standpoint. And so I think that standpoint is kind of bringing them down to earth. And the other thing is really trying to get people to understand. I am a firm believer that rich people sell their time and wealthy people own their time. And a lot of times we interchange rich and wealthy as words that, for the most part, people say the same thing. I totally disagree with that. I think rich people are high income earners who are trading their time, the doctor making $1 million,
Mhm.
and as soon as they turn off that time faucet, that income faucet goes with it. Whereas the wealthy is somebody who's purchased assets over time and they are retaining more of their time in earning income. And so for all of my groups of people, it's really trying to get them to value time as what they want and not money. And I teach that money is just the tool,
Yeah.
right? I kind of use this analogy. The local Home Depot down here, the first Saturday of every month does like a kids workshop. You build some, little trinket. And my daughter, she's, 5.5, and she holds the hammer right under the head of the hammer. And you can't get any nails, can't get any leverage. And she always is like, the hammer's broken, right? And I'm always like, as politely as I can to my princess, who I love more than anything, I tried to explain to her in my, no, honey, the hammer's not broken. It's the person holding the hammer, right? And so you got to hold it down. If you hold it down, gosh, you can get a whole bunch of leverage. And so what I tell people is every dollar you have is a hammer. The hammer never changes. The dollar never, ever changes. Jeff Bezos' dollar was the same as mine. He just used it in a way better way than I ever did. And so as soon as you start to view money not as the end goal, but rather as a tool to get you your time back, then you start looking at, gosh, how do I save taxes? How do I analyze ROIs? How do I look at risk? Because now you're taking money away as that shiny object that I'm trying to get to, and you're trading it with my time. That's my shiny object. And then I'm looking at money as purely as any other commodity or asset I would look at, anywhere else. What kind of tires do I buy on my car? It's that simple of a mentality.
Right.
And so when I do that, there's usually a little light bulb that people are like, that is what I want. And then we bring down to reality and kind of build from there.
Yeah, it's funny when you're talking to people, even like seasoned investors, where really what it all comes down to is what mindset they have and
Mhm.
how they are thinking or how they are interpreting certain things really impacts just the basics. And that's what I always try to tell my students. You change your mindset and you can change everything because,
Mhm.
I think in the way that we were brought up was you go to school, you get a degree, you
Mhm.
get a job, you put away money in your 401k, and then at
Yep.
some point in time you magically get to retire. But the problem
Right.
is that doing that, our incomes haven't equated to the amount that expenses have increased. And so we're seeing so much of a differential. And if you're only investing in a 401k, you're likely to retire poorer than you were when you were working, and it shouldn't be that way. And so
Yeah.
it should be that your mindset is, yes, I can work and it's fine. People have jobs that they love, absolutely. But you should be working for your time so that you don't have to depend on a 401k that your company is also putting in. Your money is making money and you're not making that money from your time.
Right. And the tricky part, especially with and you probably see it too with this college generation, is just the social media makes them feel like they're so far behind in the world. Like, oh my gosh, I was joking with my wife yesterday, about all this stuff. And I was like, if I did everything, I'd have to get up at 3 a.m. so I can go to the gym, then take a cold plunge, then get into a hot room, then do infrared light, then take 96 supplements, then do this. Then I'd have to do gratitude. Then I'd have to journal. Then I'd have to read. And I'm like, there's so much information coming at you. And especially in that generation, because they're like this. And I mean, I'm guilty too, but they're really like this, that it's like, there's got to be this instant gratification. And there's so many things that if you're like not doing, all of a sudden you're not doing anything. And I really try to tell people, like, if you look around and you turned off the internet, the basics of making money haven't really changed.
Right.
Right. It's reinvested at a decent rate of return while managing your risk and try to give less to the IRS.
Absolutely.
Like it's a 3-step program. Whatever you're investing in, it's a, try to get a decent rate of return, try to manage your risk and try to give less of it away.
Yeah.
If you can do that, you're going to be fine. And I think people have to set their ego to the side,
100%.
and it's funny in my, some of my classes, I always get so how many houses do you own? And I'm like, no, you're missing the picture, right? You should be asking how much money are those houses making me?
Exactly.
Right. It's not a bragging about owning 30 roofs. I don't want 30 roofs. That's a pain in the ass. I don't
Yeah.
want,
Right.
that's not what I
30
want.
roofs might be costing you money and not making you money.
That's right. Yeah, yeah. But it's that ranking, right? And I tell people, look, you're ranking it on the wrong scale, right? It should be that I'm getting paid and I get to do what I want with my time. Like that's how I define success. I'm not on private jets and I don't have a private island and all of those things, but that's not how I rank it. But in their eyes, because that's what they're being fed all day,
Absolutely.
it's hard to bring it back down to reality.
100%. Okay, so one of the things that I always like to ask my guests are there any good books that you're reading or any book recommendations that you have for our listeners?
Great question. So I wrote a book, so I'll recommend one for or I
Yeah,
have it here because I'm not shameless. It's Plug the Holes, Fill the Barrel. It's a guide to building wealth
barrel.
with real estate. It's on Amazon. So Plug the Holes, Fill the Barrel. So that's one I would suggest your readers read. Actually one of the books that I really like the book. It's not real estate related, but it's Phil Knight's book about how he created Nike. Um, and the reason I like it is because one of the things I kind of tell everybody is that you see what you're shown. So if I show you a nice car and a big house, you just presume life is peachy keen and it fell in my lap or whatever, right? And reading that book, kind of you see Nike, but gosh, when you read what he went through and just the problem after problem, but his mindset was, I got something here. He didn't know exactly what it was, but he knew he had something. And so his mindset was, okay, that hurdle stinks, but I'm going to go through it and see what's on the other side of it. And so resiliency in anything, but especially in investing is huge. I put a quote on our board every single class, kind of a motivational quote. I enjoy doing it. And, I tell the students, one of them was, luck is when preparation meets opportunity. Like there is no real luck, right? You're either prepared and you're out there searching for opportunities, or an opportunity passes you because you weren't prepared or whatever. But for the people that combine those two and become successful, people will look at them and say, you were lucky. And it's like, well, you see what I'm showing you, right? You don't see what's behind the door. And so I like that book. And I think if you want to get outside the real estate realm, that's a great one for resiliency.
Yeah, I love that. Okay, so wait, tell me a little bit about Plug the Holes, Fill the Barrel. What is your book about?
Yeah, so it's about kind of starter real estate investing? How does the mom and pop investor who doesn't own anything or owns one or two kind of get to that really 3 to 5 houses just to change their wealth?
Mhm.
And plug the holes, fill the barrel is a mantra I've used in teaching for 12 years now, which is really just about thinking about your finances as a barrel, right? And how many hoses do you have going into that barrel of varying sizes, right? How do I grow those? And then how do I kind of plug the holes that just seep out of our barrel all of the time?
Yeah.
And so I use that to kind of relate it to real estate to give people a real simple way to kind of think about their finances and how to invest. And then we talk about long-term rentals and just building wealth. It's a really simple, it's not your rich dad, poor dad, where you're going to own 1,000 apartments, and it's not leveraging for millions of dollars. Nothing wrong with those things. But I think they're daunting to 99% of the public, and they keep people out of real estate because it's like, well, why only buy two? And I'm like, I can show you why to only buy two. I can show you, it's a college education paid for each of my children. It's my daughter's wedding paid for, which she's never getting married because I'll kill the guy. But there's these things, right, that sometimes you're thinking about is like, well, if it's not going to get me to retirement, why do it? I'm like, well, I don't know. Two kids are going to college because of house one and house two. What do you mean? Like, and so I think just bringing it to the basics, and that's what that book does.
Yeah. So I'm curious because this brought up another question in my head. What do you find to be the biggest hurdle that your students kind of face in order to actually go forward with their first or, next
Yeah.
investment?
Yeah. I think at the college level, a lot of it seems to be money.
Mhm.
I think that honestly is their easy excuse is I don't have any money, right? And I don't think money is actually their number one hurdle. I think their number one hurdle is not knowing what direction to go simply because of the massive information that is thrown at them every day. If they went on Facebook or TikTok or whatever they're using nowadays, right? And they put in, real estate investing, holy smokes, the sheer number of probably 30%, which is illegal tactics. Another 40% that is just totally unrealistic, worked for that particular person. It's like it's like these people that went and bought a ton of houses in '08 and '09, and they're like, look at all the appreciation I made. And I'm like, well, yeah, you bought it at a 40% discount after the greatest real estate recession ever. And then you're comparing it to a 40% in 2-year gain over the greatest real estate increase.
Mhm.
No shit, you made a lot of money. Like, right? Like, I mean, but
Exactly.
I'm not going to pay you 10,000 for your seminar to tell me that I missed the '08. And I got this. And so it's really just telling them, just let's bring it to the basics. I tell them, start with one house, put one tenant in there, see if you even like it.
Yeah.
And at their age, there's plenty of time to go to the moon.
Mhm.
But you got to start on the ground.
Yeah.
And so I think that's the biggest thing is getting them to parse out what information I need to pay attention to and what is just not today. May not be invaluable, but maybe just not today.
Yeah. For my students, one of the things that I tell them is like, if I could rewind the clocks of time, what I would do is what we now have coined house hacking. And,
Hmm.
I would have bought a townhouse, or even if I could have found a duplex, own it, rent it out, have roommates covering my
Hmm.
mortgage, and then, keep that asset for a year or two, and then, continue to move up.
Yep. Yeah. And the first two houses I bought, I did exactly that. Now, I would love to sound like I knew, like, oh, this is the way, right? But I bought my first house when I was 22, and I had to have a roommate to pay the mortgage. Like,
Right.
I didn't call it house hacking. I called it surviving. Right? It was like I just need somebody to help split the electric bill, and then I bought another house, and I did the same thing. And I had various roommates for almost a decade, and never paid a mortgage for almost a decade. And it was probably after a year or two of doing that that I was like, wait a minute, there is something here, right? But I never got into it calling it house hacking. I called it just, gosh, surviving, right?
Right.
Um, and I tell the same thing to people now. Like that part is still there. Like buy a house, get some roommates,
Yeah, exactly.
take all the advantage of it. Like,
Yeah, if
you
you
know,
have an FHA loan where you're putting 3.5% down, I'm sure you
yeah,
can find, because it's so crazy. Some of my students tell me how much money they have saved up because they've done crypto or they've done
and
like, all these other crazy things that I'm like, I just still don't understand
right.
what
Yeah,
this is. And they're like, oh, but I have $40,000. And I'm like,
crazy.
I would not be keeping it in crypto. Like I would be putting it in tangible assets that you can actually see, feel, know that they are
Oh
there.
yeah.
Not just gonna poof, they're
Oh
gone.
yeah. It's crazy. I have a student who's 20 who made six figures wholesaling this year.
Wow.
And I
Wow.
was like, if I was 20 in college and made six figures, me, my friends, oh, we'd be having a hell of a time, right? And I think he's doing some of that, don't get me wrong.
Please
But
no.
now, like, instead of like sticking and really perfecting what he's done well, now it's like he's got this feeling of like, I must do the next step. I must do this. It's like amplifying that risk. And I'm kind of like, hey, look, you got something here. You're good at what you're doing.
Yeah,
Ride this out for a little bit, invest that into a physical asset, and then you can get risky, right? I think a lot of times there's this jump from a little bit of success to, oh my gosh, I got to do this massive risk. And I tell, my students and all investors, there will be plenty of time for risk in your investing lifetime. It doesn't have to be 6 months after tasting a little bit of success,
exactly.
right?
Mhm.
Actually feel what risk is before you start to dive into it, right?
Absolutely.
Yeah, and we understand a little bit differently. As having children, our risk thresholds varies, and their risk threshold at 20 is through the roof, as all of ours was, right?
They're
So I
jumping
get
on
it.
buildings and like
Yeah, exactly. And I try so hard not to be the old guy telling them to like pump the brakes, because I get it. But I do wish some of them would pump the brakes and do it the right way.
it's like you should be taking risks when you're young, but make sure they're calculated risks and make sure
That's
that
exactly
you're
it.
understanding exactly what that risk might mean and
Yep,
you understand the options. So as
that's
long as
right.
you've calculated that, yeah,
Yeah. Yeah, some of their
go spread your
calculations, I've
wings. I
seen
don't know
them.
what to tell you.
Yeah, yeah, I've seen some of their math calculations. I think they should have a couple people double check them as they run those.
Oh, I have to always tell them, I'm like, are these your conservative numbers or are
Right.
these your like, because we always like to talk like base case, best case, worst case. And I'm
Yep.
like, your worst case is still not even what I think could be the worst. So I
Right.
think your worst case should maybe be shifted to your base case, and we need to come up with better numbers.
That's right. That's right. Like, yeah, sometimes they'll run these analysis and I'm like, wait a minute, how is every one of your analysis successful? Like,
Yeah.
how is everything like all like peachy keen?
I was seeing like 36% IRR, and I'm like, and then they're like, well, we're going to get a really good interest rate. We're going to get a 6% interest rate on this,
Mhm.
$1 million asset that we're buying. And I'm like, do you think a bank's going to find that
I know.
6% is a justifiable interest rate for a
Yeah.
plot of land that you plan on developing on that has no actual
No actual asset. Right. It's just dirt. It's just a stormwater runoff right now. Yeah, some of that is, and that's where you try to share your life experiences without, again, sounding like the old guy in the room. And I think, like I said, if they can snag and retain 20% of it, 30% of it, that's better than nothing.
Yep,
I know what I was like in college, and so I get it.
I
I
get
definitely get it.
I get it.
Yeah.
But we at least try and I give you props for being a leader, a thought leader in this industry. I'm glad that I have, colleagues that also share the same
Yeah.
passion and I really love what you're doing down there in North
Thank
Carolina.
you.
And obviously anything that I can do to assist or help, I would be happy to do so.
Yeah, I'll connect the dots. I think NC State's program and Penn State's probably has a lot of overlap or similarities. And I think, I kind of say, competition happens at the bottom, collaboration happens at the top. And so I think a little bit of collaboration there to kind of hear what's been successful for your program would obviously help ours as it grows. And vice versa, maybe as the new guys with this program, we're seeing different stuff that we can share as well.
Yeah, absolutely. I think that's been my biggest learning example this year is collaboration over competition.
Mhm.
So
Yeah.
love that. I think that's an awesome
Yeah.
way to end. Jason, thank you again for being on the show. It was so great
Yeah.
to have you. And that wraps it up for another episode
Awesome.
of Inspire Wealth. We'll see you on the next time. Make sure you subscribe down below so that you can catch all of the action of all of our upcoming episodes. Bye for now. And for those who want a more hands-on learning experience, check out our online courses at inspirewealtheducation.com. Whether you're just starting out or looking to expand your investment portfolio, I've created step-by-step guides and resources to help you achieve your financial goals. So hit that subscribe button and let's start building your wealth one episode at a time.